Welcome to part 2 of our 7-part series of breaking down the sales process. Today, we are going to be focusing on education. It is incredibly important to be able to understand more than just the type of insurance you are offering. Sorry if you couldn't hear me, forgot my microphone. And when I read a lot of the existing scripts that are in circulation regarding final expense insurance, it seems to be we're just focusing on what we sell. And the theme of what I'm reading is a lot of focusing on the description. We offer small, affordable final expense plans that are typically used to cover funeral costs and final expenses for people living on a fixed income like Social Security or disability or even our disabled vets. So that's kind of what I hear over and over and over again. But when you only focus on what you sell and you don't take a step back and look at the bigger picture and also understand what your customers are experiencing, what they're seeing, what they're looking at on Google, what they're getting in the mail, if you also don't address the elephant in the room and educate them on what else might be out there, you are going to open yourself up for an objection at the end, which will be that's not enough coverage, that's too expensive. You'll get, well, I need more than that. You're going to get all sorts of objections when your expectations aren't met or they don't match what your customer was looking for. And you'll find yourself now reacting to that objection and saying things like, oh, those are term policies. Do you know what term is? And you try to backpedal your way out of it. And that doesn't work because it's going to lower yourself as the authority by reacting to objections rather than just handling them up front like we teach, right? Handle the objections up front so that when you get to the end, there's really not a whole lot left that you're going to have to overcome. In fact, you are able to isolate it to very small, specific concerns that are much easier to overcome because you've already done all the work in steps 1, 2, 3, 4, 5, and 6, right? Prior to going in for the sale. Part of doing an excellent job in education is getting all the information that you need from discovery. Now, part of the things we get in discovery, you need to go back to video 1 to watch that. But some of the things we need to know in order to properly educate someone is going to be if they have been searching for a while, what they found, what they're seeing online, what advertisements they've clicked on, how much coverage they're hoping to get. All of those details. I should also mention like what expenses they're looking to take care of. All of that information is incredibly important so we know how to make the education section relevant to them. Okay, so we wrap up with discovery, we provide a good summary. All of that is done in part 1 of this series. Then we transition into kind of who we are now, right? We want to introduce who we are, what company we represent, if you're a broker. This is kind of also where I teach my team to identify whether or not someone has a bank account, and we can choose whether or not we want to move forward. So we'll say something like, you know, we do specialize working with seniors that are living on a fixed income. And I know you mentioned earlier, you're living on a fixed income. Is that money being directly deposited into your bank account, or do they put that on a direct express card for you? And you're going to get your answer pretty much right then and there on whether or not you want to move forward with taking a direct express card, which has a 70% chance of canceling in the first year, or if they have an active checking or savings account. Perfect. Then we're going to move on to education. And the first thing that I share with my customers is that before we kind of talk about what we do, it's really important that you have a general understanding on the difference between term insurance and whole life insurance. Now, has anybody ever explained it to you before? Doesn't matter if they say yes or no. And if you start asking this question, one of the things that you're going to be surprised to hear, especially with people that have gotten quotes before you, 9 times out of 10, they're going to tell you no. And that's a really great opportunity for you to take another step back and say, really? So you've talked to 3 people prior to getting on the phone with me, and nobody has taken the time to explain the difference to you before, that's shocking. That's a way for you to elevate yourself as the authority, as the expert. Well, would you mind if I kind of break it down for you and help you understand it so you can make sure that you're making the right decision? Now, if they say, yes, they know the difference, this is really important to not skip this section. You want to take a one step further and say, that's great. I'm glad to hear it. Would you mind sharing with me your understanding on the difference between the two, just so I can make sure we're on the same page? And what you'll find when you start asking that question is that at least half of the people that you'll talk to actually have no idea. So then you can move forward and say, well, it sounds like you got part of it right, but is it okay if I fill in some of the blanks? Or you'll have people that will simply think term is just lasts for a period of time, and they'll describe whole life as something you can borrow against, which still isn't the in-depth explanation that we need our customers to understand, as well as helping them understand what they're looking for and managing their expectations. So let me give you a few examples. The generic explanation of term versus whole life. This is our cookie cutter client that just wants to take care of funeral costs and final expenses. They are getting inundated with advertisements day in and day out that are going to advertise a large amount of coverage for seniors for a small monthly payment. They're going to see advertisements like $150,000 for $15 a month, or $250,000 for some ridiculous monthly payment. Or even, I know Colonial Penn doesn't offer term insurance, but they're still going to see the advertisements that say $20,000 for $995. And it's our job to start explaining to them what that means, what they're looking at. And so we'll start with the generic explanation with, well, term insurance is temporary protection, and it's designed to provide a large amount of coverage for a very small monthly payment. And then you're going to give them some examples of what they might be seeing advertised online or in the mail. Now, if they are just looking for a small policy to cover funeral expenses, the most important part of education is to make sure that they understand that the advertisements that they're seeing are not realistic to what they are about to purchase. That whole life is not term, and that because they think that they can just get a life insurance policy for X amount of coverage for a small monthly payment. They don't understand that there's different types. And even if they do, they don't really understand what that means. So you need to break it down for them, and you need to be very, very specific. After you explain term insurance, you want to check in with them. Do not make the mistake of going from one important paragraph to another important paragraph without taking a break or checking in. Does this make sense, Mr. Customer? Do you understand why this temporary insurance might not be the best option for you when it comes to protecting your family? And would you mind sharing with me why you feel that way? Let them tell you. Let them say out loud that they wouldn't want a policy that's just going to cancel no matter how inexpensive it is. Because ultimately, if they outlive a temporary policy, all that money they've paid for the last 10 years is gone. They have to reapply with no guarantee. It's going to be much more expensive if they get approved, and more than likely their family will be left with nothing. So now, after we've checked in, we're on the same page that this is not the type of coverage we're looking for, we are going to move over to whole life. Now, let me explain to you what whole life insurance means. Whole life insurance provides a smaller amount of coverage for an affordable monthly payment, because if it wasn't affordable, nobody would get it. But it's specifically designed to last your whole life. The price never goes up, your coverage can never go down, and it can never be canceled at any age, or even if your health changes. The only way that it can cancel is if you cancel it, or if you stop making those payments. Does that make sense? Check in with your customer. Do you see how this type of permanent life insurance would be a better option for you for what you're trying to accomplish for your family? And if you didn't ask why before, ask why now. And of those two, why do you feel like this one might be the better solution for you? It's not a redundant question, because you're also wanting to make sure they're listening to you. Oftentimes we talk so much that our customers start to tune us out. So asking those questions, sometimes you're going to ask them, why do you feel that way? And they're going to have no idea how to answer that question because they weren't listening to you in the first place. So now you have to go back and just take onus for it. I'm sorry, maybe I explained that in a way that was difficult to understand. Let me break that down for you again. This is a really, really important part of our conversation because you're about to make a decision that's going to affect your family's future when you pass away, right? Get them on the same page with you. And that might require you starting over and explaining what that means again. Before I move on out of education, I'm going to give you some examples where you're not always going to explain just the generic differences between term and whole life, but explaining to your customer that the large amount of coverage for the small monthly payment is key. That is the whole point of this explanation, because we don't want to get to the end and put ourselves in an objection because we didn't give them the proper explanation to begin with. Let's pretend that you get someone that wants to take care of their mortgage, that wants to take care of debt, that wants to take care of a car, but they also want to take care of their funeral costs. And they're really kind of looking for much more coverage than we can provide. You have to be very strategic on how you go about this. You're going to start by explaining what term insurance is in the same way that I explained earlier. But now you're going to make it relevant to them by taking the information you got earlier and bringing it into this part of the conversation. Now, you shared with me earlier, Mr. Customer, that you were hoping to get, I don't know, maybe $100,000 to take care of the mortgage, maybe to take care of the car payment, in addition to your funeral costs and final expenses. Is that correct? Yes, that's correct. Okay, so the only affordable type of life insurance that will take care of these expenses will be term insurance. And before anybody comments and argues with me about that it can be affordable, I want to point out that our target customers' age is 65 plus, right? A lot of them in their 70s, some of them even in their 80s. So it is not affordable to get a whole life policy for $50,000, $100,000 at this age. It is just not. So even though I'm speaking in generic terms, I understand there's going to be one-offs. I'm not speaking to the one-offs. I am speaking to the mass, to the majority. So the only affordable type of life insurance for that much coverage at this age is going to be temporary. Now, you don't want to make them feel bad about what they were hoping to get. There's nothing wrong with getting a just-in-case policy, because if you were to pass away in the next 10 years, there would be a significant amount of money there to take care of these larger expenses. But it also makes the funeral expenses go away too. So what happens if you outlive the 10 years? And now your family doesn't have the money to pay for the funeral costs and the final expenses either. So then you go on to explain whole life, right? First, you're checking in with them. You're having a philosophical conversation about, I understand that you could get temporary, but what happens to this piece? What happens to the piece that we don't know when our time is going to come? And we might need something that's never going to cancel. So then you're going to explain whole life. You're going to do it the way that I showed you before. So is it okay if I make a recommendation? My recommendation would be to get a smaller whole life policy that's never going to cancel or go up in price to specifically take care of the final expenses and the funeral costs. And then I can put you in touch with someone that we work with that can help take care of this temporary insurance for a much larger coverage, just in case something were to happen to you in the next 10 years to take care of these other expenses that you're concerned about. Does that make sense? Are you open to having two policies that serve two different purposes? Because you cannot leave education until you and your customer are on the same page. And that same page needs to be moving forward. You are only going to be discussing a small policy for final expense insurance. And that is the only time that conversation can come up. You cannot bring that up in discovery. It won't work. Because right in discovery, we're only focused on our customer and their needs and their desires and their wants. We take that information and we save it for later. And the later in this example is education. Because now we've kind of built up some credibility with our active listening skills, with our summary, with having a deep understanding of what our customer wants. And now we take that information and we bring it out now when it's relevant. And if you do it in the right way, your customer will actually respect you even more because you're not just laser focused on what you sell and discounting all the other stuff. You're actually helping them understand the bigger picture and giving them recommendations that they might not have been able to think about on their own. Okay, so that's the second way to help your customer understand the difference between the two. Now, third way, number 3, if you get someone that is concerned about getting approved because of their health, and if you've been in the industry for, I don't know, 3 months or longer, you will know that you will have conversations in discovery. People will usually be very open with you voluntarily without you even asking that they have some sort of health condition, whether it's diabetes, whether they had a heart attack. They're going to be pretty vocal, in my experience, about their concerns with their health, and they still have expectations that they want to get $100,000 of coverage. And so now we have a 2-part issue. A, more than likely, they won't be able to get approved for a term policy. B, they probably think term policies sound attractive because someone with a significant health condition probably may not think they're going to outlive 10 years in that example. So you don't want to position someone with a health condition as a large amount of coverage for a small monthly payment, but it only lasts for 10 years and then it cancels, because someone who's sick might think that sounds like a really great idea. So if you get any clues whatsoever in discovery that you're dealing with someone that has some sort of health condition, and you're not always going to know, but a lot of times you will, then when you explain term insurance, you still start out the same way. You know, do you know the difference? Would you mind explaining me if you know? Do you mind if I share with you the difference between the two? Term insurance is temporary protection. It provides a large amount of coverage for a small monthly payment. However, you shared with me earlier, Mr. Customer, that you had a heart attack 6 months ago, or you shared with me earlier that you have neuropathy, you know, from your diabetes, whatever the condition was that they volunteered to share with you. And it might sound attractive to you to be able to get a large amount of coverage like this that only lasts a certain amount of time. But I want to be transparent with you that it is very difficult for someone with a significant health condition to get approved for these types of policies, because they're banking on the fact that people who get approved for these policies are going to outlive them. Does that make sense? And I'm really sorry to have to share that with you, but I don't want you spinning your wheels and having to apply and then get denied. So I think it's really important that while we're on the phone, you have a good understanding of what is available to you, because it's not like you can't get anything from anyone. It's just, I need to help manage your expectations so that you know what is available to you, so you can make good decisions moving forward and stop spinning your wheels on searching for things that may not be available to you at this point. Okay, so it's very, very important that depending on the information you learn in discovery is going to change how you explain education, how you explain term insurance. There's the generic explanation. There's the explanation when someone is hoping for a lot more coverage. You need to separate the need. You need to separate the need for mortgage protection versus final expense. If someone you know has a health condition, then you need to make them understand that even though term insurance sounds attractive, they probably won't be able to get approved for that. And then you go into explaining what whole life is and how that would be the appropriate solution that they're looking for. Okay, so we've kind of drilled down education. We always want to check in and make sure that we're on the same page. We do not leave education until you know that the only thing you're going to be talking about moving forward is a small whole life final expense plan that is taking care of the funeral costs, final expenses, or a small plan that's never going to cancel, that's just designed to leave something extra to their family. Now, here is one last secret before I leave education. Before I move on to problem awareness, I'm going to take the sale away again. Now, do you have any questions on the difference between the two? Do you understand that why whole life is a better solution and really the only solution for what you're looking for? Okay, good. Now, to be honest, Mr. Customer, you can get a whole life policy anywhere, really. There's hundreds of companies that you can get a whole life policy through to take care of final expenses. But what I want to do next is I want to go one step further and explain to you why a lot of people do choose our company to take care of their final expense needs. And we will talk more about that in volume number 3, episode 3 of the Breaking Down the Sales Process and Problem Awareness. I hope you enjoyed education. I know it was a lot of information in a short amount of time, but hopefully it starts giving you some insight on what you have to do to separate yourself from the rest of the competition and to elevate yourself as the expert, and more importantly, to help your customer understand what the heck is out there so they can feel more empowered to make a good decision for themselves and for their family. My name is Dana Neeson, and I will see you on the next video.